I think we have Aditya, has joined in as well. We'll be taking the next session. So
Sure.
thank you so
Great.
much, Sai. Thanks for your time. Like really love the session, guys. I'll add Sai to our group. We can connect one to one for any queries that you may have. Sai, can we also share the deck on the group as well with the founders?
Yeah, sure.
Great. So thanks again, for sparing some time on a Sunday, and looking forward to collaborate.
Sure, no problem. All the best,
Thank
Vipul.
you.
Bye
Thank you,
bye.
sir.
Thank you. Thank you.
Hi Aditya, how are you?
Hey, good. All well. How are you doing?
Doing well. Guys, we have Aditya, who's the founder of Assembly Travel Luggage. You would have also seen them on Shark Tank recently. So Aditya has, very generously agreed to do a session for us on how they've built such a successful D2C brand, how they've raised multiple rounds of funding, how did they crack Shark Tank, and I'm sure so many questions that are top of the mind as founders for us as well as we're kind of raising our first rounds. So, Aditya, thank you so much, for taking some time out. Very excited to kind of learn, from your experience. We have some very exciting consumer brands as part of the cohort. Very eager founders, very driven founders. So, very excited to learn from you.
Super. No, thanks so much, Karan. Thanks, Sapna. Thanks for inviting me here. Really good to be here and and have the opportunity to talk to all of you. So yeah, we can start straight up. So I think the brief was that maybe sharing more about our fundraising journey. So I put a few slides together. I think it's less of a presentation and more like cues to have some sort of dialogue. I think fundraising journeys are very individualistic, very I'm sure every founder's journey is quite different in the way it starts and has an outcome. But I think by sharing my experience, if there's some triggers of conversations, happy to take that up. But no, thanks for having me, and great to be here. I'll just share my screen and just give me a moment.
And guys, if you have any questions that are top of the mind, please feel free to ask on the chat, or like maybe you can ask during the discussion as well. Happy to take them up as well.
Great. Just give me a moment. Great. Is this visible?
Yeah, we can see it.
Okay, great. So yeah, we're building a D2C luggage and travel brand. Karan was generous to say that we're on our way to being successful. I think we're very much work in progress. Probably, if you guys are at a pre-seed or seed stage, we're probably just 1 or 2 years ahead of that journey. But things are shaping well, and I'll kind of take you through what the last 2-3 years have been. Screen is visible, and I'm audible as well, right? So we're good to go.
Yeah, we can hear you on the screen as well.
Perfect. So I put a few slides together, and please, feel free to ask questions at any point. See, this is a photograph from literally day 10 or day 15 of us
Wow.
putting it together. This is a small workshop we had put together in West Delhi, and the objective was that can we have some sort of a chaotic workshop where we can put some products together. The reason why I put this is because from a capitalization perspective, this is your pre-seed stage. I'm sure a lot of you have experienced it already. Very difficult to raise money as a consumer brand when you're pre-revenue and when you're just putting building blocks together. So essentially, it was me and my co-founder Mohit and 2 very early angels that it was, one of them is my close friends who's been an ex-colleague in the past, and the other one is my brother. So essentially at that stage, it's only people really well who will back you with some amount of money. So we pulled together about 1.5 crore. This was actually in end 2019 with the objective that hey, let's experiment, let's create some products, and let's see that can we even come up with a differentiated product that allows us to even have a right to play in the game. So that's the context with which we started. Did not raise at that point of time, felt that we should be putting our own resources and kind of getting it together. So this was very early in the game, hadn't started fundraising then. The reason why I put this slide is because the thing about fundraising is that what I've experiences, you can't time it. There are so many factors that are outside of your control. So, there was this US brand that started in 2017 called Away, which, I think a lot of people may have heard about it now, but it kind of showed a glimpse of how a category like luggage, which hadn't seen much innovation either on the product side or brand side or digital distribution side, can look like. So I think because they started in 2017 and 2018, 2019, they hit a lot of momentum, raised 100 million. They were profitable on the first transaction. I think some amount of, because of that event, because of this happening in the US, I think within 2-3 months of us starting, I think we started getting a lot of inbounds without us trying to really do an outreach. And it's not something we could time, but because of this happening in the US, I think a lot of investors here started showing interest. Obviously we were too early then. We didn't even know what we were doing at our end. So we, started declining some meetings and weren't sure what to make of it, or even to be able to do justice with external capital. But the reason why I bring this up is because 3 months later, those leads just vanish. There's no way you can time it. So, if you say no at one point in time, you have to be, ready that a quarter later, those leads are just gone. So that's what we experienced completely. And that's just how, the fundraise experience is. This is a slide I put in because I think this may be peculiar to our particular brand, because, of course, when COVID happened, a lot of categories were affected. But because we were in the travel space, I think our category was affected far beyond most other categories, because, that's what, if people are not taking flights and airlines are empty, nobody is going to be buying luggage. And I think that was the tricky part where, if the macro environment is as bad as it is, no good business, whether you have product market fit, whether you have good metrics, nothing can help you. So it was literally that same pool of capital that we had raised, in late 2019. We had to stretch it right up to, surviving COVID, because you just can't raise capital. Nobody's going to give you money to survive a natural disaster like that. So, again, same pre-seed stage, which I think in our case kind of extended longer than anticipated, but, that's just how it was. So, anyway, the goal from a capitalization perspective was use what we have, survive this phase, keep costs low, use, probably sell daily use products like laptop bags, which would not be as affected as luggage would, build your capabilities, because, that's one of the silver linings where, the clock stops. So you can just, kind of polish what's happening internally. So that's what we did, and built our supply chain, built our digital distribution. And, I think the goal there was to just survive. So, I think the reason I mentioned this is that, so I think 2 years in, we hadn't raised any external capital, and we're pretty much powering through what we had initially pooled amongst the promoter group. I think this slide is trying to show where we were when we started raising our seed round. So this was towards early 22. The third wave had receded. We were feeling confident of where we were in terms of the nucleus we had, and felt that, we should begin doing some sort of an outreach. So as far as all the building blocks go, from a SKU standpoint, we had 3, 4, 5 SKUs, mostly in the soft luggage space. A couple of them were doing well, at least where you can talk about it and you have some good customer love to show. Just 1 or 2 distribution channels were not live across all marketplaces. We were running some Facebook ads. We were live on Amazon. And pretty much with these 2 channels, we were trying to just perfect the engine and at least try to show some traction so that, there is something to talk about in terms of context with what we're building. And, the third graph is just, show some customer love, because that's a starting point which, external people who want to back you, I think that's something they're looking for. Status of team, we were 7, 8 team members, just a core group, me, my co-founder, and 5, 6 other team members. So very thin team. Obviously we were thinly resourced, so had to, make use with what we had. Where were we as a business? And I think, maybe a lot of businesses need to reach this stage to get to a point where you can do a seed and get people interested in backing you. So we were at around 25, 30 lakhs a month. I think, so it means that, 3, 4, 5 products are doing okay. You're selling on 2 channels and you have something to show. You have, maybe 20, 30, 40 orders happening on a daily basis. And that's what's giving you the context to learn the business. So I think what was good in our case, which which people liked was that we were profitable on the first transaction. I think that was an important metric because, I think people are, especially in the consumer space, people are not necessarily looking at EBITDA at positivity at a very early stage, but CM2, which is your unit economics, which is, you're selling a product, you take out discounts, you take out your cost of goods sold, you take out your logistics, you take out your marketing costs. You should be making some, even if it's break even, you should be breaking even on that, because that's in some way, a CM2 break even or early positive, even single digit positivity shows that there is some signs of product market fit. It means you're making something and the cost of sale is getting recovered, and there is something to work with. If you're negative on CM2, it means the business is still work in progress. So anyway, we were happy in Feb, March being where we were. We felt that, we had really rode out that 2.5 year period, as best as we could, and we were ready to raise capital and do a modest round at that point of time. But yeah, that's the state of the business in terms of where we were when we started, with the efforts to raise our first round.
And I think this is so relevant for the cohort, because most of the companies are at this stage today, right? Like, I think the metrics that you mentioned, I think most of the companies would be at the same metrics. So again, I think very, very relevant from a stage perspective.
Great. No, and it's current. It's, I think, in some sort of way, it's of course, there will be the odd, let's say, aberration investor which may go pre-revenue. There may be a star founder which gets backed very early. I think you can't factor those things in, right? But other than that, I think it is some sort of a playbook where people are expecting, and it's great that you guys are at this stage. People are expecting startups to be at the stage when they're doing their seed. So that's great to hear that most of the cohort or all the cohort is at the stage. So that definitely gives the confidence that when you're talking to someone and you're saying CM2 positive, it just changes. Then it's not a theoretical conversation that is it working or not, or a matter of opinion. I think the data just shows it, and then somebody may decide to pass for reasons which are totally different, but nobody can question the product market fit that gets created if you're at this stage.
Yeah.
Okay, first challenge that we faced was this one, right? So what we've seen is that if you're in a category where there is a playbook, I think it works both ways. If there is a category that has a playbook, it means there are enough startups that have that investors have seen, and therefore they know what works. The positive is they know how the mechanics of the math works and how the LTV and repeats and CAC work out. The negative is that because it's not a playbook yet, it requires a little bit of a leap of faith, or right brain thinking to see that, okay, can this kind of scale? And I think we felt that because there weren't too many precedents of luggage brands getting created, and I think 7 out of 10 people would have rejected us, saying that you're a category which has low repeats. How many people would buy luggage in a year? And people are expecting the luggage to last 5, 7, 8 years. So because it's low repeat, it's not a solid business. So I think the reason why I bring this up, because this is a framework which a lot of people in 21, 22 were talking to us about. I think in retrospect, when we're sitting on 24, on the flip side, what's really worked in our category is that the AOV is strong, because the AOV is 5,000-6,000. And because a lot of people buy set of 2, set of 3s, the AOV can go up to 7,000-8,000. And somebody's buying a small luggage from you. 6 months later, they might buy a bigger luggage. 18 months later, they might buy a backpack from you. So it's not still high repeats, but it's moderate repeats if you have a good wide assortment. But the point being is that 7 out of 10 people rejected us because in our conversation, because they said the repeats are low. I think in some way that became a challenge that we had to confront. But in retrospect, it worked out, because if there is one framework not working, as long as the products are being loved, and as long as you're making something that people want, at the same point of time, some other metric ends up working out, where because of a high AOV, your first transaction positive, and therefore the need to do repeats to get to profitability on a customer is also lesser. So, but I wanted to bring this up, that this was clearly a challenge that we did face, just from a narrative perspective, that hey, luggage is a low repeat business and therefore we're not interested.
Aditya, how are you calculating repeats? So this is basically on a monthly basis. How much of the revenue comes from repeat customers? Is this?
So yes, so I mean, it can be both ways. One is this exactly what you said, that if 100 rupees of revenue is coming, how much of it is repeat? But I think the other way, which a lot of people were saying, is that okay, if a customer comes today, when is the next time they come? So I think they were coming more from that angle, because the minute you start building cohorts, and in categories like food and FMCG and personal care, and that becomes a really important way, because you are first transaction negative because AOVs are low, and then you're making assumptions, and rightfully so. If you're able to create good products, then people are coming back. If a shampoo is getting over, they're coming back in the second month and the third month, and you have some math working out there. Whereas in a category like luggage, it's not like people are coming back every month.
Yeah.
But because the AOVs are high, they don't need to come back every month. So for the math to work out. But clearly that you could. So I think the analogy is that if any of you are building in a category where there are not too many precedents, then therefore the playbooks may not just get get conditioned. You can't copy paste a playbook to a new category, and therefore, but the silver lining is some other thing works out, as long as you're playing in a space that or you're building products that customers want.
Can I ask a quick question? I'm just sorry at this stage, just because
Yeah.
you're relevant to what you were showing in your slide.
Yeah.
Is that how many of these people who said no to you, or who didn't understand this, the repeat piece that you have within your category, how many of them understood and came, and came back? Did that happen, or they just passed? I'm just curious. No passing judgment on this, but
No, absolutely. See, every investor has their right to decide where to spend their time, energy, and their experience tells them, where to function, right? So I think it works both ways. I think for most people, I would say out of those 7 investors, maybe for 4 or 5 of those 7 who were rejected, would probably would continue to hold that thesis and framework where they feel that, hey, this is an important part of their business. It could be because they're primarily a tech investor, and that framework is gold for them. It could be because they've experienced some other category where that's really important. But we've had 1 or 2 cases where an important investor for us in this round, which passed us in the seed stage, but has come in our Series A, very candidly admitted that, hey, we were wrong when we saw you 18 months back, and you've obviously metrics have worked out, and we're happy to explore it again. So so not everybody is married to that framework, but I think investors also are flexible depending on what signals they see and what their belief systems are.
I think Apurva has this very famous quote. He says that every no is a maybe and every maybe is a yes, right? So maybe if you're
Yes.
just in touch with your investors, keep sending them your MIS updates, on a regular basis. You
Definitely.
never that they can come back.
Definitely. And I'll allude to that, and that's what has happened in our case. There is no permanent no. It's a series of conversations and touch points that add it up. Is the presentation blurred? Is it visible?
It's blurred.
Okay.
It's blurred.
I'll just take it live again. Yeah. Is that visible here?
Yeah, it's coming.
Okay, great. So I think very fair, and I'm sure this would be pretty usual for most people fundraising to face some framework which doesn't go in their favor. So anyway, so coming back to where we were, that as a business we felt that we were at a good phase, 30 lakhs a month, unit economics positive, and we had a product pipeline that we wanted to build. So that's where we started raising. And this is the round that we raised, seed round of about 2.75 CR, which I would call as a modest round. I think 3 CR, 2.5, 3, 4 CR, in I think is a fairly good number to be raising, from at a seed stage. I think the other thing to also highlight is that, and I'll allude to it a little later as well, that consumer businesses don't need a lot of capital. And the other thing is that consumer businesses, it's not like the supply of capital is also that much. So it kind of works out both ways, that you don't need a lot of capital. There's not a lot of capital available. And I think going into this round, we felt that we should be raising about 2.5. And through the process of, let's say, 4, 5, 6 months or so, we ended up at the 2.75 number, and we're happy with what we raised. And we felt that that's enough to kind of take the business. Our goal was, hey, how do you get to a crore a month sort of run rate, or a little over a crore? And it can differ from a category to category. I think when you're raising a seed, and you're in probably a personal care business, the benchmark is higher because there are that many people who have achieved that. Maybe if you're not in an FMCG business, I think a crore is, with good unit economics, is a great testimony that a large business can potentially be built after that. So our goal at 30 lakhs a month was to raise about 2.5 CR. I think here what I'll discuss is that what were the pools of capital that we found even available and accessible to us, right? So the first obviously is angels, which is, typically that group came from people who were friends, family, acquaintances, and references of each of these buckets, right? So goal was, typically at that point, you're only able to aggregate smaller checks, 3 lakhs, 5 lakhs, 6, 7 lakhs. That's the sweet spot for most people. And I think that's what, we started chipping away, and, got that number to maybe about 20, 25 angels, and about a crore of that we raised. And I call that a founder syndicate, because we just ran an angel list RUV and put all these checks in one place. And, some of them were strong names that, people who one knew from, from my startup experience in the past, or, a few were people who, other D2C founders who came to know us, when we were post that we had gone live. But I think good group of quality people where, you have the right sort of, let's say, access to some advice, networks, introductions. So I think we were quite happy with that pool. And,
how many conversations did it take to get 25 angels?
I would say almost, and very time consuming and laborious. I would say 70.
Wow.
I mean, I'm just saying from I don't remember the exact number, but, I can just, if I were to look at it, definitely 60, 70, which means that, you're every 2, 3 people you're talking to is, maybe one is converting. If it's a good reference, I think here the difference I'll highlight is that, there is a initial phase of doing angel, and there is a momentum phase. I think once you get to that 50, 60, 70 lakhs, momentum sets in, and enough people feel comfortable that, okay, my friend has put money, or this person I respect is putting money, or this person knows him, let me also put, a 3 lakh check or a 5 lakh check. So I would say that when you start out, you have to start with people, get the number to 40, 50 lakhs, and then start doing outreaches, because, and towards people you don't know, and you don't necessarily need too many well-known names. I think it has, you want to make it as time efficient as possible, and get as much of that money clocked in, whether that's 50, 70, 80 lakhs, but at the same time, have a few names which are, people who are well known, so that that acts like a signal to funds that, okay, this person is a professional angel and is evaluating them, so that some sort of social proof would get created. So
and how much time did the founder syndicate take?
Nothing actually. There was, this is that angel list RUV.
Overall, across the 70 conversations, like from getting confirmations across the 25 people, like how long was that process? Like, did it take 2, 3 months?
Yeah, it would have taken. I mean, we didn't stop. Like, if the fundraise journey is a 5, 6 month journey overall, right from day 0 to money in the bank, on day, even when even if 25 angels have transferred the call, the call for money is done and you've transferred it, and then that's when the real momentum starts and inbound start coming. So you don't, and if everything seems fine, you don't say no to that money. It's good money. It's built over several months of process. So even when the call for money of those 20 founders would have been done, if 7, 8 founders or angels would have approached us after that, we would have continued taking the money right in, as long as the process is continuing.
Got it.
So, but that would be the, I would say that would be the foundation of the round, because before you're going to other people, which is, hey, a platform or a small consumer fund, or you're trying to buy for a check, they want to see that, they're not, that the round is not dependent on them playing a role. The round is anyway happening. And that's what you mean by momentum. That when a round is anyway happening, that's just the nature with which money works. That if a round is already happening, more money starts chasing you. Whereas if a round is not over the hill yet, it gets harder, and that inertia continues to set.
Yeah.
Aditya, I have a question.
Yeah.
So when you were reaching out in this RUV, what was your approach like? I mean, was your approach more advisory or more like, I'm raising a round, why don't you join? Just want to understand, because this is really useful.
Yeah. No, so your baseline is so I don't think an expectation from angel is to the baseline expectation from all angels is the capital that they put in, and that's it. So it's not like one is going and saying that, hey, I need your advice. So you're clearly asking that, hey, this round is happening, do you want to participate? So it's clearly a transaction where somebody is backing you because in their asset class so of course people like my brother will put money in what I'm doing partly because he may think I'm competent to do what it is, but also partly to say that, hey, let me support you. So I would have had close friends saying that, hey, I just want to be part of your journey because I want to support you for what you're doing, right? So, but the minute you start going outside the people well, they're backing you because they feel that they can make money off a startup that does well eventually. Now, amongst these 30 angels, and there's no way of finding out who those 5 are, 5 turn out to be super angels who are active with you, who are engaging with you, who are making introductions, who you have your mind, they keep you in their mind space, and that's amazing. And they're but that's the bonus. That's not what you are seeking. That's not what you're expecting. Because time is scarce. It's still easier for someone to put a 3 lakh check, but time is scarce. So how many people, so typically angels have to decide where to spend their time. So in our case, 5-6 of those angels have turned out to be super angels and big advocates for us and have played a big factor in us getting introductions, but that's not the starting point with which I reached out with them for.
Thank you. Very helpful.
So yeah, so I would say the foundation of the round was definitely that crore and a half that we put together, as far as the syndicate went. And then, of course, there's public information of which there are these 4 or 5 angel platforms like Let's Venture and IPV and Mumbai Angel Network and India Angel Network and public platforms where most angels can register and so we did go live with one platform. We went live with Let's Venture, so that would have been an allocation, and it definitely helped that we already had 1.5 crore or so in place from the Founders Syndicate. And the other thing about these angel platforms is it's not as easy as it seems, because there also you need a lead. And so if you don't have a lead, it's as good as not having access, because you need a lead there typically who is vouching for you and who knows how the mechanics works and is opening their network, and other people are then joining in because the lead is saying that, okay, this is something that I find prospective. So I think that's where, and that hustle doesn't stop in every round, but especially in this round as well. If you're going live on any of these angel platforms, you need someone there advocating for you. And in our case, one of our strong angels made a reference to one of the potential leads who screened us over a period of time. Finally, when they said yes, that's where I would say the labor to raise that 50, 60, 70 lakhs from an angel platform was relatively less, because that syndicate is doing that heavy lifting for you. So it is that sequential step that there's no way we would have been able to go on a platform, get that syndicate or that lead in place if we hadn't done the Founders Syndicate part of it, right? So it is that momentum that gets created. So I would say that these 2 buckets are what took us to about 2 CR, which was the goal we had. And then again, you can't time it, but there was a consumer fund that that spotted us, liked us, wanted to put a discovery check into us, into the business at that point of time, because they felt that the business had legs. And again, like I'm saying, that's not something you can time, but because you already have a round that is moving forward, that that's an inbound that came, and we closed that check and we got to about 2.75 CR, and that's how the round mechanics fell into place.
Amazing. Aditya, I have a question, right? So a lot of our founders are right now at that founder syndicate stage, right? So like they would have got commitments from good founders, 30 lakhs, 40 lakhs, 50 lakhs. They're building their founder syndicate. They've got about 8, 10 angels on board.
Yeah.
Right. So, and obviously the first goal is, as you said, like the first part of the process, close the 75 lakhs to 1 crore, right? Over the next couple of months. So let's say if that happens, right? So do you still wait for the micro VC or the consumer fund or an angel platform to raise the larger round, or you do a call for money for with the founder syndicate, and essentially maybe you divide your goals into two, right? So like for you, like from a 30 lakh, your goal was to go to 1 crore, but maybe from a 30 lakh, you use that 1 crore to kind of go to about a 50 lakh, 60 lakh a month, and in the meanwhile also build conviction with the micro VC or consumer fund to then raise the remaining part of the round. Like I mean, like, have you seen cases where this has been divided into two, and because obviously capital for some of the business is very important right now, so like whatever commits you're getting, you kind of get the call for money and kind of start scaling your business with that.
Absolutely. No, so, time is everything, right? Like, and what you find in the angel world is that those leads are also perishable.
Yeah.
If you take a commitment in 1 month and 4 months later the round is not closed, and you're
Agree more.
then following up, then you're jeopardizing or risking even the commitments there. So, there the goal here is keep your goal, minimum possible. So, I spoke to a founder recently who said that, hey, I have a 5 CR goal for seed and I put 50 lakhs in place. I was like, hey, that's a big delta to be looking at. Why don't you bring your goal down to 2 CR? And see, the thing in this world is that you could, if like in our case, our goal was 2. Nobody stops us if money comes in to go to 2.5 or 3.
Exactly.
But
But
if you go out saying, if we went out saying that, hey, our goal is 3 and you're sitting at 1.75, then you're like, it's no man's territory. Then you're like waiting for the, it's like neither can you close the angels, because they would also like, so an investor would also like other investors coming in, because that de-risks their capital and, and validates them. So I would say keep the goal small, as long as you have, and that depends on, what you are able to close. I would say, even if in our case, if we had just that 1.5 crores of founder syndicate, and that, because that's what you can control. You cannot control the lead of the micro VC falling into place, and you definitely can't control the inbound of those, there are hardly 7-8 consumer funds. So you definitely also can't control the timing of somebody saying, somebody has to decide to give you money. So we would have closed at 1.5 crores and moved forward, and probably, if not got to 1.25 CR run rate, got into 70 CR, sorry, gone into 60, 70 lakhs run rate, and then again gone to market. So completely valid.
Yeah. No, I think very relevant. I think a lot of founders can resonate with this approach.
Great. So this is where we were. Felt good about the round. Felt that there was enough capital to kind of, I think when you're building, you can only see a couple of years at a time, right? And you do well, you get backing, you earn the right to go, a further couple of years, and that cycle never stops until you don't need capital anymore. So that's where we were. Felt good that there's a lot of latent value in the business, and this business will begin, help us unlock that. So now I'll come to what this, where this money took us, and what the second part of that journey was in building. This is where we were. So, what I showed you was April of 22. And now I'm straight away, and then the fundraise got over, and I'm straight away taking you to July 23, where did the business land? This was about 7-8 months from now. I think the clear thing, which is expected for a business to get traction, you have to find that one hero product for you that is building momentum. So, the first phase of that traction, that initial traction, you're grinding it out. You don't know what's working. You're groping in the dark. I think in our case, what worked out is we made the shift from soft luggage to hard luggage. So during that COVID phase, we kind of were able to switch our supply chains and focus more on hard. And there was just so much more tailwind in hard luggage over soft. That is not something we knew would happen when we started. But, this specific product, which we designed, it was a cabin luggage, a hardtop luggage, which has an extendable external laptop compartment, We were probably one of the first few people to get that done, and it was available at a price point of 5,000 rupees. And when we did build this product, again, didn't know that it'll do really well, but this product really built the business in that 2022 year, because we hadn't really done hard luggage before that. And it did well on web store, did well on Amazon, and then we built a few variations of this product. But I think the point being is that once you've raised that initial seed round and gotten the nucleus in place, I think the next goal is that how do you get to 1 crore plus per month with good unit economics? In our case, and I'm sure in a lot of other cases, 1 or 2 hero products will take you, because it's hard to build hero products. It's not something you can time. You can get lucky if your hero product lands on your on your plate on day 50. In our case, it landed on day 750, right? We were in business for 2 years plus, and then our hero product kind of fell into place. So the left part of the screen shows you what worked to take us to a point where we were ready to do our pre-series A round. The right side of the business tells you these are gross numbers. We were doing about 1.5 crore net and about 2.25 crore, gross. But the reason why I put unit economics here is because, again, when you're starting to approach institutional investors, you're ultimately, of course, thesis matters, but when they look under the hood, the business should look solid. So I felt that internally we felt that we had a solid business, and we were a CM2 15% business with the products that we were building, and that was a stage that that seed round helped us capitalize to.
That's amazing. Your goal was to kind of go to like a 1 crore per month, but that seed round helped you almost crack 2.5x of that.
Yeah, but I'll come to it. We struggled to raise our pre-series A for the first few months. So it was more like, I would still say there was a time cost to that delay. But yes, because our pre-series A round took longer to close, you just kept growing organically. But the sharper increase, the business grew 4-5 times from April 22 to July 23. So from a 30 lakhs a month to 1.5 CR plus a month, that happened within 12-14 months because some hero products worked out. And then we continued to grind it out till our pre-series A round kind of closed. So that's where the product and business were. Why I put these 2 points on the slide. So the right side just shows you, okay, from a 7-8 people team, we were a 35 people team, and a lot of young people, a lot of people with 0 to 1 to 2 years experience, are part of your early phases of business, because they have energy, they're not as expensive compared to seasoned folks who have a lot more experience. So that's as far as the team stage was. On the left hand side, something which resonated, which I felt, the reason I bring this up is that this is a category where most people are dependent on China for for their supply chain, because that's China is the factory of the world and luggage is a technical category, and therefore most people would go and buy quality product from there. The reason why I put this here is that this was something which allowed us to get noticed by people in the investor community, that okay, you are building a luggage brand, there are probably already 1 or 2 other luggage brands that are doing well and are at a bigger scale than you, but what is so special about you guys? This came as one point that created some sort of a moat or differentiation in the minds of people, that because you have access to a local supply chain, because you are building something, if you have a local supply chain, it means you need less working capital, it means your inventory holding period is lesser, it means you can do R&D, it means you can learn from your mistakes cheaply. So there are a lot of advantages of having a local supply chain. But again, I would imagine that a lot of business, there's so many startups out there. So of course, metrics is important and a lot of macro points are important, but it helps you if there's something under your hood that creates someone to feel that, okay, this is your right to win and you can build on. So this was our right to win, which we positioned when we were talking to people during our pre-series A.
And generally, like if there's a brand which don't own their manufacturing or supply chain, like generally, like what do those brands say? Like, I mean, do they talk about their brand? Do they talk about their marketing, their team?
Yeah, absolutely. So Karan, whatever your strength is, see, we got constant feedback during that phase that our branding is under index, that we're weak on branding. So if somebody else is great at branding, they need to put that foot forward. I think because me and my co-founder had some experience in this category before, we started building assembly. I think that's where the strength of the the business came from. But that could be whatever your strength is, right? You could be great performance marketers, and therefore you're very good with growing what you are building, right? So and that's where every business is different. I think in our case, that was one strength we had. But when you're a young company, you have more weaknesses than strengths. So I mean, we were called out for our branding. We were called out for a bunch of other things. But I'd say the two things which we were strong at were our supply chain and our capital efficiency. So and I think that's what we that's what you need to that's what you need to be talking about more. Just one second.
Actually, hey Aditya.
Hey Tarun, how are you?
Good, yeah. ये बड़ा relevant point है Karan, because two of our portfolio years, and I'll let Tara and Adhir, they'll sort of resonate with this. I had a long chat with them yesterday, including habits, right, where we are talking about essentially what's the moat, or Aditya probably used the word right to win, right? So besides obviously domain backgrounds, our passion, we have to play on something which is very, very different. Right, so it's a very, very relevant point here, Aditya, that you touched upon.
Great, thanks. And see, the thing is that in a startup journey, you can't time a lot of your strengths, and things kind of work out in a different sequence for different people. But yeah, I think something that it's so hard to build that you have to put your strengths front and center and play on them. So if we
absolutely. And I think I was very encouraged to hear that. Very unique that the hero product came in after 2 years, right? Which you just mentioned.
Right.
And that's something just evolved organically, right?
Correct.
So that's another point which is very, very relevant here in terms of some of our portfolios, Karan, because you don't know when down the line you actually crack a hero product, right?
Yeah.
While building the organization.
For sure.
Yeah. No, it's so tough to time. Like, creating hero differentiated product means that you've built something which nobody has before, whether that's better on price or better on utility or design, and that's a hard thing to do. So it's a bit random. It's a bit, I think what ends up happening is that that's what they say, right? If you're longer in the game, you're trying so many things and something works out. So it's a bit like that it's not something we could have built on day 200. Great. This is the last slide on, I think it's a little repetitive to where, to the math slide before, but this just tells you where we were, towards the end of 23. We, reached around, 2.25 in gross revenue, positive unit economics, made sure our web store and marketplace has a good split. We were burning about 4-5 lakhs a month, which was, capital efficient. So essentially, and this is something that we did speak about a lot. So if we were getting flack that, hey, your branding is not up to the mark, or actually we got a lot of flack that our design is also not up to the mark. So a lot of people felt that our design could be better than what it was. So those were the 2 points we were getting slammed on. But the 2 points that were working is that we had essentially with 1.5 crore plus 2.75, so about 4 crore plus, we took the business to about 24 crores in annualized revenue. So that was a plus, and our unit economics was a plus. So those are the things that we played on. Great. Okay. Now a couple
so
of
Aditya, sorry, just off context. I've been talking to a bunch of people who obviously raised or even been to Shark Tank, right? For the last many years. Kya impact hua hai post the show airing?
On the Shark Tank,
is it measurable? Yeah.
Yeah, so 2 parts to it. The first part is that what is the order bump you get, and is it sustainable? I think in our case, the order bump was about 2.5 times, which lasted about 2 weeks. But it's not, ultimately it comes down to business as usual, and it's your normal business levers that need to build the business the way it is. Now, in some cases, I'm hearing with other peer brands that they're able to sustain that. And that could be a function of the narrative that's gotten built,
Also to do with AOP, no?
Sorry, it could be to do with the AOV that, if it's a FMCG product, then the propensity to try it is a lot easier. Whereas if it's an intent purchase, it gets harder to do. But yeah, I think in our case, the order bump continued for a couple of weeks. But I would say the bigger win And our goal of going on Shark Tank, of course, was, hey, can you get one or two of those folks on board? But I'd say the larger goal is that it's, of course, a great medium to get your word out. I would say the bigger outcome for the business is the momentum it creates, where you'll have a potential team member applying to you saying that I saw you on the show, I would like to join your team, or a vendor saying that I want to work with you, or so a little bit of that credibility, where there are a lot of vendors that almost create the Shark Tank brands as a checklist to say that, okay, I want to work with these guys. So that business momentum would be an outcome, a bigger outcome than the order bump, which lasts a couple of weeks.
I think there's one more point. It probably also sort of publicizes the category
Yes.
significantly, right? So we had another brand. I don't know if you know, Aditya, we backed a lab diamond brand called Fiona.
Right, absolutely.
And they're already doing about 50 CR, right? They'll do 80 this year. But
Very nice.
there's a very small one which picked up. I think they got a deal from, it's a company called Jewelbox.
Okay.
And there was massive FOMO because we were closing the Fiona deal at that point in time.
Got it.
Right. So the category just, became super hot.
Right. Right. No, absolutely. So it's in radar. So I think in our case also, the episode, because I think probably the first time Luggage was on the show, and it was positioned as a match off with another brand, so that got some interest. So Jenny, I mean, I'd say that even though the outcome is not necessarily a Shark deal, there was a royalty structure that was offered to us which didn't work out, but the larger narrative of the credibility and the general radar that the category falls in is a tailwind that everybody kind of benefits from.
Got it.
Cool. So that's where the business was. Now, coming to the more roller coaster aspect of closing the round that you are that we were. So the reason why I put this slide is I showed you at the top that when we just started, because of Away having done really well in the US, there were inbounds coming, and we said no to it, and those inbounds just vanished. This happened in the middle to us as well, in this round as well. So we got a we were getting a term sheet from one of the funds, and we kind of told them that, hey, we need some time to to be able to let's say reach out to other funds as well, because we hadn't ever done that, given that we hadn't pitched to funds during that whole COVID period. And next thing that that inbound or that inbound term sheet you're getting just is off the table. So I mean, I think it's a trade-off. It's very, I think a lot of people will say that if money's coming your way, you take it. I don't think maybe it holds true in a lot of cases. I think the unfortunate thing is that you also, as a business, want to time it, because you want to know how to deploy it well, you want to be ready, you want to have optimize your process. But this is the cost of saying no. That we had a term sheet coming, we said that, hey, we want time on it, and a quarter later that term sheet is not available to us. So that's the flip side of the process. That is just the way the fundraise process works.
No, and one more important thing, Aditya, which you may want to talk about is, we keep telling a lot of our portfolios or folks we reach out to, it's very important to get the right funds or micro funds and people on the cap table.
Right.
How did you go about filtering that out? Because, obviously when we also took allocation, right, you saw some amount of merit and value add, right? So how do you filter that and, get the right folks?
Yeah, no, so Tarun, there it's very conversation led. Obviously, if it comes in a from references help, because generally like-minded references kind of gravitate towards each other. But I would say the conversation helps. So let's say there was a fund that looked at us, or there was a micro VC or a couple of micro VCs that looked at us from the lens of, they do mostly tech investments. So their lens came into frameworks which don't necessarily apply to consumer businesses. So there it becomes easier to kind of say that, okay, this will not be a fit, right? Whereas in a lot of cases where if the I think it's a it's a conversation where you're trying to align, where if you're like-minded, that chemistry kind of evolves to a point where you feel comfortable working. If you feel that you have different experiences and you're not like you may have different goals. Let's say if one micro VC is saying that we expect you to grow 3x in this year, and you feel that, okay, maybe 2 times growth is easier, or is more is a better fit for where the business is trying to grow. So it's like-mindedness,
and also long-term conviction, so that you get a lot of value add not only in the current round but even in the follow-up rounds, right? So that conviction in the long run is very important, like you rightly pointed out, because a lot of VCs which are tech focused are not really D2C centric, right? And that's their philosophy. Although I have a significant disconnect there, right? Because one of my favorite brands in India is DMart, right?
Okay.
What is the tech play there? There's no tech play, right?
Right.
But that's, I mean, these are VC, philosophies and
Right. No, say,
strategies.
everyone has their
So
domain expertise of where to play. So
correct.
I think in our experience, what we just found is that consumer ecosystems are a bit different from tech ecosystems in just how much to capitalize, how much to grow, what the unit economics expectation is. So I think some of that math generally or that like-mindedness generally works out better with people who have a disposition towards consumer.
Correct.
Great. Yeah. So this is one, before I get to the round that we, concluded, this was a challenge that that we faced, when we were raising. We did very well from April 22 to July, August 23. And, we did feel that by the end of the year, we should be able to close around, but it took longer than we expected. And I think, anybody raising will tell you that it takes longer than anticipated in most cases. And we felt that we had maxed out how much we could grow with the working capital we had access to. So we had about 1 crore in stock. We took it to about 20 crores of annualized revenue with that. And we felt that, that's as good as we could get. And, if we did not raise at that point of time, then we would kind of flatline a bit. And that's what happened. And, that phase which you're seeing over here, towards the 3-4 months, towards the end of, obviously it helped that festive season came and, and that happened. But we felt a little bit of flatlining because of time to raise. And again, you may start raising today, and it's very hard to time it as 3 months or 6 months or 8 months, but you want to give yourself as much time as possible. And this was that time where we were lamenting and saying that, why did we say no to the term sheet a quarter from earlier? Because we were getting a term sheet to kind of continue to grow. But I think, you keep learning where, yeah, I mean, saying no to money is definitely at your own peril, because, it's not for certain that money will stick around with you. This is a little bit of the reason why I put this slide is that before things started working out, what didn't work out, right? We had another lead investor term sheet, which, eventually didn't work out. So, obviously that didn't go as intended. There was this very strong global consumer fund where the Indian team was completely convinced and, said yes to us. And then when it went to the global IC, that didn't work out. And, I mean, I think this just tells you when you're raising around it, you go through the high and lows of emotions where you feel that things are working out and then it doesn't, then it again picks up. So I think the only advice here is that don't get too high when things work out, don't get too low when they don't, because a lot of it is just not in your control, right? So
I was just telling this to a founder just right now, because I mean it's a roller coaster, right? Like you have a positive conversation, then the person ghosts you for a couple of weeks, and you feel, what am I doing? Right?
Yeah.
So I think
Yeah.
it's so relevant.
Yeah, no, there are too many variables, yeah, and a lot of them are not in your control. See, the thing is that when you're a startup, there are more things that you're not good at than what you're good at. And if somebody has to say a no, and I have a slide towards that, if somebody has to say a no, they can find 10 reasons to say no. If they have to say a yes, they will say a yes in spite of those 10 because their conviction is so high. They will say yes in spite of those 10 things which are visibly not in place. So, I mean, if somebody has to say no, they'll find a reason to say no, and you can't control that. So, this was that second case. Third case, very strong Indian consumer fund. We were very excited about having them on board. And then absolute final IC stage after months of conversation, that fell through. Another Indian fund, very interested, but they had they were clearly comfortable with putting larger checks than we could absorb. So, they wanted to put a check which was almost 2x of what the full round we were doing. So, and that was their sweet spot of, the size. I mean, again, all funds have, their own math to do in terms of what their size of fund is, how much they can deploy, what's worth their time. And, we had to unfortunately say no to that because, we felt a bigger problem was to take 2x of the amount that the business needed and then I mean we were very uncomfortable with over capitalizing the business, and that didn't work out. But I think
over diluting it.
Over diluting, and but I think the tricky thing, Tarun, is that when when the pools of capital are still work in progress, you try all sorts of permutations, and but I think these are all cases where it did not work according to to plan. Okay, then I'll tell you. Yeah, sorry.
What was some of the reasons why you think people backed you? Like, like as you said, like there could be thousands of reasons why people say no, but like, what do you think worked well in your favor?
Okay. So there are micro factors and there are macro factors. The micro factors were that the business was solid. It was a strong unit economics business that had good capital efficiency, and we were an experienced team with me and my co-founder. The macro factors which worked out, and again, I have a couple of points about that, is, a lot of investors take a very top-down thesis on a category. So in our case, you had there's a company in our space, which is Safari, which has done very well in the public markets as far as luggage goes, right? So it's one of the top performing stocks in the in the public market. So a lot of what one finds, a lot of private investors take that thesis where they're saying, okay, if this category or this company in the private markets has done so well, in the public markets done so well, that means the category has traction and momentum. And can we find vehicles in the private markets that that essentially could continue to grow, because clearly there is space to grow there. So that becomes a macro factor that you couldn't that worked in our favor. I mean, you have to give. So in our category, there's another brand called Mokobara that's done really well, and you have to give credit to them also, that in because they've shown that a good business can be built in the category. It gives other investors confidence that, okay, there are more brands that can be created that have, let's say, different value propositions, but there is some signal there that the category is working. So few macro factors, few micro factors, and it's a combination of that.
Karan, I can tell you, given that we invested, it's also about the founders, right? So we are obviously very thrilled talking to Aditya and the team.
Amazing.
No, thanks for saying that, Tarun. But yeah, I mean, it's there are just so many variables that each of these plays a part in that place. Okay, so the current round that we've done, I'll give you a sense of how the mechanics of that worked out, and it's not it doesn't mention all the entities, but it mentions a few entities that have participated in this round. We've raised a total of about 17.5 crores. And if one were to break it up, there is one lead investor, which is very focused on the consumer space. There are two other funds where it's more discovery checks, where the goal is that can you build a working relationship with these funds, and potentially, if things work out, explore double downing in the future. And then there are a bunch of angel syndicates that that have also participated, and very grateful that AC Ventures is part of that, and excited to have Tarun and Apurv and everybody on board as well. So the mechanics of this round is, again, the way I showed you in the seed round, what the universe of options were. In this round also, there are clearly some options that you have. So one is angels who double down with you. I think that's a really important part of it. So let's say all the angels that I showed you in the seed round we did, a lot of them who put 3-5 lakh type of checks, almost 7-8 of them put larger checks in this round, because they had experienced the growth and the confidence of going from one round to the other. So I would say that the biggest advocates that you have in building long are people who have experienced the journey with you. So so a bunch of these 7-8 angels have doubled down with us in this round. And then you have professional angels. There are some very high quality angels that do large checks, which typically those checks won't come your way when you're very early in the game, like a seed round. But when there is demonstrated interest where that funds are exploring, double downing with you, and the category is getting crystallized, and there's a large opportunity seeming more visible. There are some very high quality angels that capital opens up, and we've been recipients of that. Then you continue having those 4 or 5 angel platforms that that I would have mentioned in our seed round. We did not really take their support in this round because we felt that the rest of the round was falling into place. But these are your usual suspects where, if there's a larger round happening where there's a fund coming in, these platforms like LV and Mumbai Angels, generally they these are platforms that feel more comfortable aligning once there is a framework in place. And then you have a bunch of angel syndicates where people like PeerCheck, people like AC Ventures, people like D2C Insider Angels. These are some very strong syndicates which have very high quality angels as part of their groups where it just makes so much sense to align because there's there is continued conversation, there is access to there is access to references, there is this constant banter and support that's going on, and then the last bucket is consumer space. Still, it's not like the tech ecosystem where there are a lot of funds available, there's a lot of capital available. I would say there are literally 7-8 consumer funds which have the ability to put $1 million check plus, and they're the usual suspects. I'm sure everybody here would be aware of a bunch of them, and that's just the way consumer investing currently goes, where supply of capital is constrained. A lot of this is Indian LP capital, which in the tech world you get a lot of foreign LP capital also coming in. So that's the framework of how a current round fell into place.
I think what's also very interesting is that Abhishek from D2C Insider, Akrit from PeerCheck, and Umang from Alluvian were investors, right? So
absolutely.
So I think having investors who also run angels, who also run syndicates, can then become part of the next round as well.
No, absolutely. And in all the 3 names you took are very high quality angels. They played a strong role in our seed, and I think it's confidence that you keep double downing. See, everybody wants to double down when something is working better, and it works for the founders and the companies as well, because it's known capital, it's people you've already built a relationship with. So very high quality, and each one of them double down because and it worked both ways, from our seed to pre-series A business journey, and therefore it makes sense for them to have also banded together a bunch of other people who invest with them.
Karan, you can continue. I'm going to drop off. I have another call. Aditya, whenever we get 5, now that you've done with the round, we'll give you access to all the super ones who've come through us. So, for example, Akshay, Shiprocket, Chakri, Country Light, Bharat, Lifelong, one involved in InvestCorp, one is a very dear friend. He's also invested. So, we should figure out how we can synergize that network. Okay? I'll talk
Great,
to you.
Tarun. Really appreciate it. I'll reach out to you about that.
Bye.
Thanks so much. So, it's already 12. Do you want me to continue with these few slides, or?
We can. I mean, I maybe take 4-5 more minutes and just quickly finish. And then if it's okay, we can add you to our group. And founders can also reach out if you have some time. They would love to kind of connect with you.
Sure. No, happy to do. I'll very quickly just keep going through. I think a lot of this we've already spoken about, so I won't take much time. This is that point I was saying. You were asking me that what works out. Macro factors definitely work out. I mean, and that just creates some randomness in the process, because you can control the micro factors, but the macro factors about timing. So it's like preparedness meeting. They say that luck is preparedness meeting opportunity, but it's so hard to time that. But I think in our case, the fact that you have a strong company doing well in the public markets is in our favor. Same thing with the private markets. Because you have a strong company doing well privately, it creates interest from investors where they feel the category has legs for more players. This was a point I alluded to about consumer versus tech, very different ecosystems. Feel that in most cases that overlap is minimal, and we definitely find a lot of like-mindedness to people who are very focused on consumer. This is something that works, whatever, right from the time that we did our seed, we send these very simple quarterly this is not the full mail, but very simple quarterly updates telling them that what those 4-5 bullet points of how the business is doing. And I think this takes because by the time 2, 3, 4 years pass, if you continue doing it, what I found is that continues to create confidence in the mind of people who've backed you, that there is something being built, or challenges are being shared, or and progress is being shared. But this
so relevant. I think, I mean, like, this builds so much trust and confidence. I mean, I think, like, all of us need to be in that habit of kind of sharing that one quarterly update, with everybody who's on the fence, who's also said no. It's okay. I mean, like, you can just share an update. I mean, never know how
Yeah.
people come back.
Yeah. No, so we find things, a lot of interactions kind of getting built because of just sustained, consistent communication. And you have to find, some people do it monthly, some people, for us, quarterly works out. And so it all depends on what your expectations are and the investors' expectations are. Very quickly, investors or rounds need leads. Whether it's in seed round, you need one angel advocating for you, or an angel syndicate account advocating for you. If it's a pre-series A round, and I'm sure even the next few round, the next couple of rounds that happen in the life cycle of our journey, you need a lead, backing you, and then the momentum of the round starts. This was, just a slide I put saying that, if an investor doesn't have a core thesis in your category, it's very difficult to change that, because investors just have areas that they are excited about and they understand. And this is a point I was saying, in where there are just so many reasons to say no. This is just about, our lead investor in this round is someone I pitched to in our seed round, who said no to us. And then kind of that communication stayed on. Even one of the other funds that said no to us and has come to in our seed round has come here. So this is just a function that data over points of time is better than it kind of builds confidence. Yeah, I was like, it's so easy to compare your journey to star founders, because you hear some big bang rounds happening even in consumer. Everybody's journey is different. And but yeah, those are the slides that I have.
Amazing, Aditya. Thank you so much. I mean, it's so relevant. I think a few founders have questions, so if it's okay, we can just take them for a couple of minutes.
Yeah, sure.
Hi, Aditya. Thank you for your time. So, what was your valuation at seed round and now at pre-series A?
So we did our seed round value was pre-money of 15 crores. So we took a very simple math. We were doing about 3.5, 4 crores of revenue. So we just did a multiple of 3, 4 and got to that 15 crore pre-money. We felt that value created very little friction to close. So, we didn't want to, because time was important, and it's not like there's a lot of capital chasing us. So the higher you put the value, the more, you don't want someone saying no because they're saying that, hey, you've overvalued yourself. So that's what we had valued us then. And this round, because we were doing about 1.5 crore net revenue by the time we did the round, we valued ourselves at a pre-money of 70 crores.
Okay.
There also we felt, it was a little bit of a sweet spot where, where it worked out.
And what is your typical answer to the question, like, what is your right to win against Mokobaru or any other brands in your category?
Right, Jane?
Yeah. So exactly. So I think in our case, we talk a lot about the supply chain. We talk a lot about the audience segment, that, you have a brand like Mokobara that's a little more premium in its positioning and its pricing. And we feel the mass premium price point is resonating more with where we are playing. So combination of these two.
Understood. Thank you so much. That was
No, absolutely. Thank you.
Guys, any other questions? Great, Aditya. Thank you so much. Can you share the deck with us if it's okay?
Absolutely.
I mean,
Absolutely.
Founders, I think, and you told me that you'll prepare something which is like very simple, but this was so well thought. I mean, I could see that you've taken time out. Like, I could see examples from the Mokobura crew campaign, so I know that it's very recent. It's something that you put together. And I think it's just like paying it forward, right? Like, I mean, we see, like, from the outside, we see Assembly as such a successful company, but every fundraise journey has been challenging over the last 2-3 years. Lead investors backing out, COVID coming in as soon as you started, right? So kudos to you for going through it, and kudos to you for paying it forward to the community. Would love to
No,
kind of
absolutely.
learn from you and collaborate.
No,
Shailesh?
thanks so much for having me here. Always
Yeah, one
appreciate
last
the
question.
opportunity.
Sorry.
Yeah,
So,
please.
how much time it took for you to raise pre-series A round? You mentioned that it took some time.
Yeah, almost from the time we started to the, you're saying from the time we started to the time we got a commitment, or time we started and getting the call and the money in the bank?
Yeah, second.
Money in the bank, almost 9 months.
Okay.
Yeah.
And what was
I
the
mean,
reason that you rejected on a term sheet?
yeah, at that point, we had, we were very keen, good investor, we were very keen to run a process. So we felt that we needed more time to run a process and find, if there are other like-minded investors who would also like to associate with us. No right or wrong here, right? So good investor, it very well could have taken the money and moved on, but we felt that we had money in the bank that could allow us to run a process. But because we took time there, times change and circumstances change.
So, like today, what do you feel? Was it a right decision or wrong decision?
No, I mean, if we weren't able to close the round the way we intended to after running a process, I would have looked back and said that, hey, we should have, I would have looked back at that call with regret, because that could have very well moved us forward. Now that we have concluded the round in a way where we like the structure, we feel that we kind of it was a trade-off that worked out. But so it's all perspective. But I think the point to highlight there is no, if there is a cost to saying no, there's a cost to not closing when it comes your way, and that's a trade-off or risk like any other in the business. But just because you say no doesn't mean that you'll get another yes, or just because you say yes doesn't mean you'll get another yes from someone else, right? So it's just that's how the process kind of progresses.
Understood. Thank you so much, Aditya.
Great. Thank you so much, Aditya.
Cheers. Thanks. All the best to you guys. Yeah, keep building, and let me know if I can help offline in any way. But awesome. Thanks a lot for having me here, and all the very best to you guys.
Great. Thank you. All right.
Thanks.
Bye.
Bye-bye. Bye.